the key to staying rich is to avoid doing stupid things.
Hello, everybody. This is Josh Rusin, host of the Wheelbarrow Profits Podcast, the #1 multifamily podcast on iTunes, here with my co-host, the multifamily mentor, the coach, the chef, the father of 6, the best-selling author, the G-Dad, Gino Barbaro. How's it going, Gino?
Mr. Joshua Rusin, Broseph, how are you? What's going on today? It looks like there's a lot of rain back there.
A little rainy day in Tennessee, but you don't appreciate the sun without it. Excited about a few things. We got an upcoming student Bayreuth boot camp. We're going to be sharing and dropping some major knowledge with that one this weekend. And just in general, making it happen, growing, expanding, knowing better, and doing better. How about yourself, Gino?
I'm doing good, Josh. And this is one of those days that I'm really excited to have an education community, to have a podcast, because I've got an amazing guest on today. I want everyone to take their pen, put it down, and start taking notes. Shut off your phone. Just listen to this guy that we have on today. His name is Keith Cunningham. I'm going to read this bio. It's an amazing bio. He's an international speaker, acclaimed author. He's regarded as one of the foremost authorities and teachers on business mastery. With more than 45 years of business and investing experience, Keith has taught critical business skills to thousands of top executives, business owners, and entrepreneurs around the world. In Keith's Key to the Vault Business School, he has created curriculum designed to accelerate the transition from operator to owner and drive sustainable financial performance and business success. His latest book, The Road Less Stupid, which took him 67 years to write, that's what he just told me, so it's been a long process, is about adapting the discipline of thinking time, which will enable you to run your business more effectively, make more money, and dramatically increase the likelihood of keeping that money. Keith is married to Sandy, and they reside in Austin, Texas. Without further ado, Mr. Keith Cunningham, how are you?
Thank you. I'm well. Thank you for having me.
Wow, this is an honor for us. We're always, like I told you, we're looking for gurus. Gurus are out there who are making it happen, who are teaching investors. Why don't you just share your first entrepreneurial story, how you got the business bug?
Well, my very first entrepreneur, like a lot of kids, I had a paper route and mowed yards, but my very first real business was an egg business that I delivered eggs to our neighbors. My grandmother had a little farm, and so I bought eggs for her and brought them back to Houston, which is where I grew up, and I was probably 11 or 12 years old when I started that business. And what I figured out is that, number one, I actually was pretty good at the business part. I thought I was better than I actually was. But that tendency stayed with me for a number of years. That was my very first business. And really, as a result of that, I decided to pursue business not only academically with my education, but also decided to be a businessman, and moved to Austin to go to school, and was lucky enough to find some mentors and employers who wanted to take me under their wing and teach me and guide me. And so it's, as you mentioned, I'm 68 years old, and so the work that I do now in the teaching world is really based on the last 68 years of being in business.
What gave you the idea or the impetus to write a book, The Road Less Stupid? What was that genesis for that?
About 20 or 25 years ago, I started doing some amount of teaching. And it was originally at the University of Texas, academic. My old professors would ask me to come back in and teach one of their classes, and as a guest lecturer, and so I did. And what I found is that there's an abundance of skills and tools, but what's missing more often than not, and I found this in my own life, is what's missing is paying attention to the assumptions or the excessive optimism that leads to what I refer to as a dumb tax. So this is when I make a mistake and it costs me money. And every time I look back at my own career, I found these series of mistakes that could have been avoided, but I didn't avoid them because I didn't sit down and do the thinking or be thoughtful about either the story I was telling myself or the unexamined assumptions or the risk or what could go wrong. So to me, business success does require business skills and tools, but one of the tools is the ability to sit and think and be aware of the assumptions that I'm making or the second order consequences or the story that I'm telling that's a substitute for the facts. And so over the course of the last 20 or 25 years that I've been active in teaching, an enormous amount of the focus is not only on the skills, but all the business skills and tools, but also on, how do we think about our business and our business decisions? The question I love to ask people, Gino, is if I gave you the ability to unwind any 3 financial decisions you've ever made, how much money would you have? And what you'd tell me is you'd have multiples of the amount you currently have. So the key to staying rich is to avoid doing stupid things. If I could just have fewer bad ideas that I executed on, or fewer good ideas that I was executing on a plan instead of an idea. And that's the mistake that I see business owners make all the time. They tend to be investors. Amateurs make this mistake. They rely on their passion. They rely on their enthusiasm. They rely on their optimism. They rely on the story instead of taking a hard look at, I wonder what could go wrong. And if it did go wrong, what does it mean? How do I minimize or mitigate the risk?
I love that. So basically you're looking for people to get more clarity on their lives. And that's when you got to take a deep dive into it. And it's hard because some people don't want to look behind the curtain, because I've lost multiple hundreds of thousands of dollars. And I attribute that to my success because I actually got educated. Do you have any specific examples in your life of a mistake you made that you said, wish I hadn't done that?
Oh man, I've got a lot of examples like that. In the 1980s, in the 1980s, there was a huge economic real estate boom that happened in the Southwest, primarily Southwest part of the United States. And I'm in Texas, and I participated in that boom. And I was a very heavy investor in real estate, and one of the requirements to borrowing a lot of money is a personal guarantee at the time. And so I had a personal guarantee on several $100 million worth of personal liability debt, all tied to real estate. And when the market turned, which markets do, I was exposed because I had borrowed a significant amount of money against what I thought the value of the property was. And when the value went down, the banks wanted their money back. And, banks love to loan you an umbrella when the sun is shining. But when it starts raining, they want the umbrella back. So here I am, it's raining. The banks want their umbrella back. And I wound up actually going broke, literally. And I lost $100 million of my money that I had made, which included cash and equity that I thought I had in deals, but I hadn't thought through what are the things that could go wrong, and if I built a house that can withstand a hurricane. That's the key. If you stop and think about it, a house that can withstand a hurricane is indistinguishable from a house that cannot withstand a hurricane until after the hurricane. And so a hurricane happened, and I had a house that was built out of straw and sticks and not concrete because I was excessively optimistic. I relied on hubris and risky decisions, and I had this idea that more was the definition of success. You know, one of the things that I believe is that not all progress can be measured by ground gained. Sometimes progress is measured by losses avoided. You know, you look at what happened in 08, 09, 10, you know, the most recent Great Recession. And the reality is most people who lived through that would have a whole lot more success today if they just could have avoided getting stung by that recession. And so I think a critical part of investing, a critical part of being successful in business is being thoughtful about what could go wrong. And it doesn't mean don't do anything. It means design the deal so that it can withstand a hurricane.
I love that. I think one thing that I can pull out from that story is everyone listening in real estate, everyone is so focused on the net worth number. Net worth to me doesn't mean anything because I can't eat net worth. I can eat cash flow. So a lot of people out there are worried, and it's an ego number. Hey, I'm an 8-figure person, 9-figure person. At the end of the day, it really doesn't matter what your net worth is. It matters what your assets are producing as far as cash flow, as far as a rate of return. I think if we focus on that, we can be much better investors. And I think the other thing is, there's two other things. You need to know what an exit strategy is on any investment you get into. When you get into an investment, what is the exit strategy? Is it a buy and hold? Is it a fix and flip? Is it a refinance? And I think that is really important to getting into a deal. And I think the other deal, just you have to have an open mind. You have to know what investment, what niche you're getting into. That's really important. And that part where you have the debt that's on recourse, that's a really tough thing. Community banks want to lend money to you when you got money. My Italian mother said to me, but why would I go to these banks? And when they don't give me money, I don't need the money. I need the money. They don't. Just the way she told me that story, she went on our first restaurant. We had to get a loan and we had to put liens and liens. And she's like, well, why are they not? Why are they? I don't have money. I need money. If I had the money, I wouldn't be there, basically. So I thought that was an enlightening thing over 20 years ago for me. So, Keith, why are people, in your estimation, unsuccessful in business? And what are some of the big mistakes that people make?
Look, I think there's a bunch of mistakes that people make that either sabotage their creation of success or their sustaining of success. And the reality is those are two different things. There's a certain skill set that's required to create it, and there's another skill set that's required to sustain it. And oftentimes, those two skill sets are exactly the opposite. In other words, to create it requires a certain amount of risk tolerance, and to sustain it, you want to lower the risk. You want to drain the risk out. So, look, I think a mistake that business owners make, investors make, is they haven't thought through the downside. What could go wrong? I think a mistake they make is they substitute. They think a description of the destination is a substitute for the roadmap, and that's not true. I think we wind up falling in love with Oz, but haven't built the yellow brick road that'll get us from Munchkin Land to Oz. And so, said a different way, I think what we tend to do is execute on ideas and not plans. And I've made this mistake over and over again, and it's something that is critical to the thinking time in the book that I just wrote, The Road Less Stupid. It's critical that we spend time being thoughtful about, do I have a plan or do I have an idea? Do I understand the executables, the execution steps that will allow me to be successful, or is all I have a vision of being successful? It's no different than what most people do at year end with their goals. They set a goal And the problem is, and the reason they don't get the goal, the problem is not that it's a bad goal. The problem is they haven't got clarity on the consistency of execution or the priorities or the price tag that's attached to achieving the goal. They're unrealistic about the timing of when they're going to achieve the goal. And so as a result, in our lives, my life, I have very few goals. And instead, I have standards. This is a level of performance that's an expectation in the businesses that we own.
Mm-hmm.
We don't have goals. We have standards. We have outcomes. We have deliverables. We have execution. And I think one of the mistakes that business owners make is they spend the majority of their time describing Oz and this fantastic vision that they have on where they want to be 10 years from now, which always is a multi-bajillionaire, with massive amounts of passive income, which is an insane concept to me, because I don't know how to achieve or sustain any part of my life passively. I know how to do it leveraged, but I don't know how to do nothing and get rich or stay rich. So I look at it and say, how do we be realistic with the outcomes and the deliverables that we want? The mistake that we make is being excessively optimistic. It's irrational exuberance on steroids. And instead of being thoughtful about what's the upside, what's the downside, and can I live with the downside? I think, the final one that I'll mention is that I think we substitute our passion or purpose for skills and tools and the ability to execute. Every time I'm passionate about something, every time I'm excited about something, every time I'm enthusiastic about something, I'm entering into a highly emotional kind of state. And I will tell you this, and I think every sustainably successful investor or business owner will tell you that optimism is not your friend. Warren Buffett has said, and Warren is somebody we probably ought to listen to. Warren Buffett has said, optimism is the enemy of the rational investor. What we want to do as business owners and investors, we're prepared to take some risk, but the risk is based on an acknowledgement that there's stuff that can go wrong, and how do we minimize or mitigate the stuff that can go wrong, and how do we think about our ability to execute on the idea that we have. A description of the destination, a description of the vision is not a substitute for either the roadmap, the yellow brick road, or my ability to get on that road and walk the road to get to Oz.
Josh, there's a lot there to unpack. Josh, I've been Josh's mentor for the last year and a half. First of all, Josh, why people don't plan. Plans are not sexy. Plans are not the dopamine hit in our brain. The execution, the transactions are what people really crave, and they keep going after that. But once you have the transaction done or you have the execution, we have to build the plan. So let's get done and build a plan. That's the problem that I see with businesses. Even with my business that I had 20 years ago with the restaurant, I was just in there. There was no plan for me. I was doing it day in and day out. The dopamine hit of getting paid at the end of the week and going back and not really being clear about it. That's really important. And I love what Keith, you just said about leverage. There really is nothing passive in life. I mean, it seems like you're never ever going to retire. I left the restaurant 3 years ago thinking that I'm financially free and I'm going to, quote, retire. That's not how people who are successful live. You want to retire and find something you love to do and continue to do it. That's what I think retirement to a lot of people should be, because you're not going to sit around on the beach and collect interest. That's not living. That's not success. That's not contributing in life. That's one of the reasons I think why you wrote the book, The Royal Sstupid, because you want to contribute, you want to help others, and that's what giving back to others is. So you said something really, really important to me that I heard about between the execution and the planning. You have something that you call money follows management. Can you expand on that principle, money follows management?
I can. I'm gonna back up 1 second to add one more thought to what we were just talking about.
Sure.
I agree with you that the idea is not retirement. What I've substituted in my own life is probably the most powerful thing I've ever heard. I heard it about 28 or 29 years ago, and I think about it every day. Literally. And the saying is this: hell on earth would be to meet the man you could have been. Hell on earth would be to meet the woman you could have been. That idea resonates with me. And that idea argues against leaving, and it argues in favor of engaging. I don't operate the same way today that I, at 68 years old, that I did when I was 48 or that I did when I was 28. My life has progressed. And at this point, we've created enough success that we're good. What drives me is the distinction between success and fulfillment. Success to me is getting what you want. Fulfillment is giving what you got. And I think oftentimes people don't make that distinction. They're all about getting what they want, and then they achieve it, and they go, "Oh man, is this all there is?" There's some degree of disappointment. So I'm not arguing against success. I'm arguing in favor of adding where's the opportunity to make a difference, to contribute. And that's really the genesis of the teaching and the genesis of the book. Money follows management. If you stop and think about it, management makes decisions, and those decisions get converted into activities and plans. And then how those plans and activities are executed gets converted into results. So it's management, decisions, plans and activities, results. So if you think about it, lousy results are a result of lousy execution and plans. And lousy execution and plans are a result of lousy decisions or thinking. And lousy decisions and thinking are management. So at the end of the day, the jockey on the horse is kind of critical, because the jockey is going to make the decisions which result in the activities which result in the outcomes or deliverables or the results. The pros invest in people who've got the ability to execute. The amateurs invest in ideas. The amateurs hear a story about a potholder that will substitute as a sock. And so they invest in their brother-in-law's idea, thinking that it's the brilliance of the idea that's going to create the success. And, ideas are kind of important, but if you look at a patent, somebody who has a great idea and gets a patent on their idea, they will receive about 1% to 2% of revenue for that idea. In other words, the idea is worth 1% to 2%, and the ability to execute on that idea is worth 98%. Mm-hmm. So it turns out ideas are a dime a dozen, and what's critical is the ability to actually execute on the idea and deliver a favorable outcome. I'll say this a different way. What most people believe is if they want to be successful in business, they need a great product. In reality, you can have a truly lousy product and make a ton of money. shoot, most people tell me that Apple's software and products are better than Microsoft, and yet Bill Gates' net worth dwarfed Steve Jobs. Both of them did well. Most people tell me that Emirates Airlines is a better airline than Southwest Airlines, and yet Southwest Airlines has made more money in the last 10 years in the airline business than the rest of the airline industry cumulatively since Orville and Wilbur Wright. One airline. It must be because their first class is so roomy or their food is so good. No. If I ask you to think about your favorite restaurant, I already know what yours would be. It's one of the ones you own. Nobody on this call is thinking about their favorite restaurant being McDonald's, and yet nobody has made more money in the food industry than McDonald's. It's not because of their product. So what is it a result of? It's not the idea, it's how they executed on the idea. And so the saying that money follows management is another way of saying it's never what you do that will determine your success. It's how you do it. What differentiates successful people from unsuccessful people is not the idea. You name me any product or service. I don't care what it is. It could be newspapers, chewing gum, seminars, restaurants. I don't care what it is. Choose, give me 1 week. And in 1 week, I'll name at least one person who made millions and at least 100 people who went broke with the exact same idea. It's never what you do. It's how you do it. And what determines how you do it is management. The pros look for people who can execute. The amateurs back the idea. The pros back the horse, the rider.
This is really important because we're multifamily investors, and that's what our podcast focuses on. So the manage right is the most, to us, important thing. You can buy the deal right, you can finance it right, but that at the end of the day is where most investors stop. You need somebody to manage right, which is the wheel of the wheelbarrow. That's in constant motion. If you don't execute daily and weekly and service those customers and service those tenants, which we call residents, and continue to give back customer service, you can have the best deal. You can buy to the best cap rate. It can be cash flowing you through amazingly. But if you don't hire the proper management and you don't put in the proper systems to run that business, you're going to falter. So I agree wholeheartedly with you, because that's why you say all investors, some do well and some don't do well. It's because they don't mind the shop. And that's a really important thing, as scaling up from 25 units to over 1,500 now and going. There's a lot of big difference between having a little mom and pop 25 unit property as far as scaling up. And a lot of people will falter, and you have to slow down and build that progression. So you want it overnight, instant gratification, but it's always good to slow down and to build those systems. So that's really important that you hit up on that. Keith, how have you been able to build your teams as you've scaled up on businesses? What are some really good team building tips that you have?
So I'm not a huge believer in team building. So I am much more interested in finding, attracting, hiring, and retaining A players. A players are people who have a high internal emotional need to succeed. A players love to be measured. They love accountability. A players love scorecards. They love dashboards. They love taking tests. You think back to the fourth grade. There was some kid in your fourth grade class who was an A student. And that kid's favorite day was report card day. On report card day, that kid skipped to school, and they could hardly wait to get their report card because it was going to have all A's. That's an A player. You look at the bulk of everybody else, report card day was their worst day. And it was their worst day because they were about to get told, you know what, you have more potential than what you're showing. You got B's and C's and a few D's and occasionally an F. And it's not because you're not smart. It's because you didn't do well on the test. You didn't study. You didn't do the work, whatever that is. I think hiring A players and then putting them into a culture. Not that, so I think a mistake business owners make is they confuse perks with culture. Perks are how many jelly beans are in the kitchen and whether you do or don't get to bring your dog to work. Those are perks. That's not culture. Culture is how do we treat each other. Culture is very outcome and deliverable focused. It's accountability. Accountability is culture. Caring about your people is culture. Jelly beans and dogs are not culture. And so instead of spending time working on, if I got to work on team building, chances are I don't have A players and chances are I got a lousy culture. If I would focus on how do I get A players on my team, people who've been there, done that, have a high internal emotional need to succeed, who I don't hold accountable. Instead, they hold themselves accountable. They report out instead of me checking in. Those are two different things. If I'm checking in, I'm the mom. If they're reporting out, they're the adult. At one time in my life, my mom had to check in with me to make sure I was brushing my teeth. That hasn't happened in a long, long time. The day that stopped happening is the day I took ownership of my teeth. I said, these are my teeth. And if I'm going to keep them, I need to brush them. And so that's the day my mom got to quit checking in. Instead, I took ownership. I think team building becomes redundant and unnecessary if I have A players and a great culture. And I think as business owners, as the leaders of our companies, our investment portfolio that have employees, I think if we spend more time focusing on how do I make sure we get A players, and there's a great book for that. The book that I would highly recommend is a book called Who by Jeff Smart. And it's a book about, how do you identify, hire, and retain A players? Most of us, when we hire people, very first place we start is we start by trying to figure out how little to pay them. Somebody says they need $40,000 a year. The very first words out of our mouth are, okay, good, we'll start you at 38. What kind of thinking is that? The person we're hiring represents all of my leverage. I have hundreds of employees in our various businesses that we own today. I'm not trying to figure out how to pay them less. I'm trying to figure out how to expand their job so I could pay them more, not pay them less. And yet what we do is, and therefore, what do we need? We need team building programs because we're trying to figure out how to pay A players less. Mm-hmm. That doesn't make sense to me. I think the focus on team building should be rerouted to a focus on A players and how to build a world-class culture.
Well, see, part of the problem, Keith, is that, I think Eric Gunderson said in his book, man attracts not what he wants, but what he is. If you're not an A player yourself, you're not going to attract A players. And I wasn't attracting A players 5-6 years ago. Now I've got Josh on the call with me right now. I've got an A player. I mean, the Jake and Gino community is filled with A players because I actually grew and I started thinking about culture. We have a blue collar work ethic culture in our community. We think of students first. We actually call them customers. They're not clients. They're in our care. So if you start building that culture internally, I agree with you 100%, but it's hard for people when they're starting a business to poo-poo the culture. I think it's the most important thing because you want everyone going towards a certain ideal or a certain something that you set in your business, and that's what we purport to. So I think culture is amazingly important. 5 years ago, I didn't. That's why I didn't have a successful business. Now we're able to grow something. So I agree with you 100%. Josh, any words on that?
Yeah, it's definitely a very clutch thing, right? Because those people are representing an arm of you. And Keith, I agree with you, right? That culture comes from the top down and the inside out. And so what I've seen is when you're able to do that and have the right people in the right place, the whole ship beats to the same drums on the same missions. I couldn't agree anymore.
Let's take a quick moment to hear from our sponsor.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
All right, we're back. Josh, let's get over these short answer questions to Keith.
Keith, got some good questions for you here. What is your favorite book you've ever read and why?
I'm a voracious reader. I read 2 to 3 books a week, and I have for 30 years. So I have a fairly intense library. I think there's a number of really, really good books. I think Good Strategy, Bad Strategy by a guy named Rumult, a book called Execution by Bossity, a book called Measure What Matters by Doerr. Those are all, I think The Road Less Stupid by Keith Cunningham is a really good book, and I've read that book a number of times. Look, I'm looking for books that give me insight. I'm looking for books that are written by pros, pros who eat their own cooking and they're not throwing up. I'm looking for tools and strategies and distinctions that will, maybe sometimes they're very, very, very small, but these are strategies and distinctions that allow me to produce better results. I'm not necessarily looking for easier, but I am looking for better. And so the books that I just mentioned, along with dozens other, are books that I think are very, very powerful.
Well said. What about your best habit for success?
Thinking time.
Tell me more.
Thinking time is by far the most, and if the book, The Road Less Stupid, is about this idea of setting aside 45 minutes, 1 to 2 times a week, to sit with a very powerful question and think without the phone, without the texting. Close the door. Nobody can interrupt. But let me read you something that Warren Buffett said. Warren Buffett said this: I insist on a lot of time being spent thinking, almost every day, to just sit and think. That is very uncommon in American business. I read and think. So I do more reading and thinking, and therefore make fewer impulse decisions than most people in business. I do it because I like this kind of life. This idea of thinking time is critical because business and investing are an intellectual sport. Business and investing, money, does not react well to emotions. Optimism is not your friend when it comes to business and investing. And so this idea of sitting thoughtfully with an idea or a question and generating more choices, examining assumptions, looking at possible second order consequences, finding the risk. We're experts at finding the opportunity. We suck at finding the risk. We're horrible at identifying what could go wrong. And so as a result, we wind up making money and losing it, making money and losing it. We're on this yo-yo back and forth, particularly in the real estate world. You look at most real estate investors who've been in it for any length of time, and their net worth rides the economy. The economy is in cycles. The economy is going up. Everybody makes a ton. Economy goes down. Everybody loses a ton. Economy goes back up. Everybody remakes it. what I want to do is take out those peaks and valleys. The reality is most business and most investors can have mistaken catching a good wave with being a good swimmer.
Mm-hmm.
They think that if the economy goes up, their boat floats and their boat goes up along with the tide, which in reality doesn't mean that you're a good sailor. It just means you happen to catch a big wave. And so what I want to do is I want to iron out those mistakes and have fewer dumb tacks. And if I do that, I'm going to have a whole lot less drama and a whole lot more money.
Well said. What about the best deal you've ever done? So obviously you've been in business for a while, done tons of businesses, had a lot of success. What's the best deal?
I've done a number of deals where I've been very, very successful. The most profitable deal certainly was the one where I lost money, but I learned the most valuable lessons. I've had several deals where they didn't go the way I thought they were going to go. I didn't get the outcome I wanted financially. I got the outcome I needed for the lesson that I needed to learn. I lost $100 million in the 1980s. I was giving a interview in Ireland about 10 years ago after I had remade all my money. So I lost it and remade it. I was giving an interview in Ireland and this on the radio. I was about to do an event there, and the disc jockey asked me before we went on the air. The disc jockey asked me, "Is there anything that we shouldn't talk about?" And I said, "Yeah, don't ask me how it feels to lose $100 million. I can tell you it's not good." And so the interviewer, the disc jockey, said, "Okay, we came back and now we're on the air." And the disc jockey says, "Okay, we're here with Keith Cunningham, the man who lost $100 million. Keith, how does it feel to lose $100 million? And I went, "Oh, God." I mean, so it was a setup. And I looked at him and I said this: "Look, life is like a university. And in university, there's courses, and every course has a tuition. I just took a course in the University of Life, and the tuition was $100 million. The question is not, first of all, not very many people get to take that course because the tuition is kind of high. Secondly, the question is not, how does it feel to lose $100 million? The question is, did I get my money's worth?" And the answer to that question is yes.
Yeah, but see, Keith, I have a good way of looking at it. The pro is you at least had $100 million to lose. The disc jockey was never even going to be close to that $100 million, right? That's the first thing. I think the con of that would be going to my wife and saying, "Hey, Julia, I just lost $100 million. I wouldn't want to be in that room when I told her that." I've told her some pretty bad news, but I'm not up there yet. So to the disc jockey out there, how does it feel to make $100 million and then to lose it and then to get it back? Because that's the thing. That's what Henry Ford said. You can lose all your money, but you can't lose the knowledge and the experience that you got. And then you're going to be able to go back and make that again. So that's the amazing part about that whole story, right? It's unbelievable that you had the $100 million. You were able to lose it and able to use all those business skills and all that knowledge you learned to rebuild.
You know, I like that. To add on top of that, I definitely think in life you're going to learn. And there are two ways. You can learn through the school of hard knocks, which, Keith happened to take his lumps on that one, or the school of applied knowledge and building the quote unquote hurricane-proof house. So like that.
So Josh, this is your, I can't believe you didn't use your quote here. Josh's favorite quote is pay to play or seek to serve. So there's either two ways you can do it in life. You can pay for your education, or you can go out there, find a mentor who's done it and seek to serve that mentor. And I mean, really give the mentor a lot of value, and, you give to get. So I know Josh loves to throw that around. I'm surprised you didn't throw it in there, my friend.
That's true. I think that's a really good point. And I think anybody can get lucky and make it. I think it takes skills and tools to keep it. I think there's a lot of people who have gotten lucky over the course of the last 5, 6, 7 years, and whether they're investing in the stock market or Bitcoins or real estate. You know, there's people out there that get lucky. And one of the things I admire about what y'all are doing is you're not relying on the rabbit's foot. You're relying on, let us teach the skills and tools that are required in order to create sustainable success. It's not about getting lucky. It's not about the rabbit's foot. It's not about hope. It's not about can you visualize it. It's about can you execute on it, and having people around you who are not only successful but also can teach the skills and tools, I think is critical to minimizing the dumb tax.
Love that.
Well said. Keith, what's a project you got on your plate right now that you're excited about?
We are pretty much, at 68 years old, we are pretty much on the sidelines. We're more in a sustain, maintain, than we are stomp on the gas. Had you asked me this question 10 or 15 years ago, I would have had a very long list. The bulk of my time right now is that I'm active in doing stuff. The bulk of my time now is dedicated to the fulfillment side, which is the teaching and the writing and the giving what I got. You know, we have a few minor projects that investment opportunities that we look at. But to me, that kind of comes with the territory. You know, if you have money and success, you're constantly going to be looking for how do I be a good steward of that money. And I'm not looking for excitement at this point in my life. In terms of business, I'm looking for maintenance, sustainability, boredom. I'll say it this way: drama costs money. Excitement costs money. Every time there's drama, I'm going to get out my checkbook in all of my businesses. And so I'm not looking for more drama. I'm not looking for more excitement. I'm looking for how do I hit more singles, not home runs. I don't need to swing for the fences. I need to hit a single. I need to hit a single. And I think that's one of the mistakes that business owners and investors make. They look for opportunities and get excited about, you know, swinging for the fences. And the problem is that when you miss, nobody's on base. And so I'm not a big believer in looking for exciting projects. I'm looking for things that will either create fulfillment or maintain what we've got.
Excellent.
Not the answer you were looking for, but nevertheless, the answer that is.
No, there's security in hitting those singles and doubles and not always swinging for the fences. Like you said, sometimes that if you get lost in this big opportunity, you tend to forget about the risk there, and then you get caught in that downside. And what you took so long to build, it's going to take a lot long. You know, you have to rebuild it again, right? That's not what we want to do.
Don't want to do that at 68 years old, I can assure you.
Yes. All right. Before we dive into how the listeners can get a hold of you, I want to sum up some of the key points I was able to take away today. So guys, for everyone out there with ideas of grandeur, that's great. But the real key is we need a path to get there. What is your game plan? And to piggyback on that, not only having the plan, but the execution of it, the commitment to it, the right people, having the culture, recruiting A players, and really judging it on how people treat each other, the outcome, and then separating out the logic from the emotion. Keith, I think this is a point you'll agree with a lot. A lot of people tend to think there are two sides to a coin, right? So you got risk and reward. What I like to think is there's a third side, the edge of the coin. And I like to look on both the risk and the reward to make a logical decision. And it sounds like that's a lot of what you summed up here today. Gino, you got anything to add to that?
Couple things. I think you need to have that time off every week to get clarity. Start your day off with clarity on what you want to achieve that day, 1 or 2 or 3 big tasks that need to get done. That's really important. You need to have reflection. I think Keith would also agree with this, but you need to have gratitude for what we have in this country. We have an amazing ability to live in pretty much a free society. We can build a business. We can go work for W-2. We can do whatever we want. That's really important. And I love what Keith said about success. Success is getting what you want. Fulfillment is giving what you get. I think to me, it's an amazing way to look at it, because we all want to become successful. What does success mean to you? To me, that's getting what you want. But the thing is, most people don't know what they want. So get clarity on what you want. I wanted to leave the restaurant. Now that I left, I had clarity. I was just looking for my sole purpose. My sole purpose is to help other people now and to create the Jake and Gino community. If you can strive towards your sole purpose and what you want to do in life, you're going to live a much more successful and fulfilling life all at the same time.
Boom.
I agree with that.
Keith, how can the listeners get a hold of you?
We have a website, as you might expect. It's called Keys to the Vault. KEYSTOTHEVAULT. Keys to the Vault. You can send us an email, info@Keys to the Vault, and we will get that and help you. I teach courses. One is the 4-day MBA. I teach a course called How to Buy or Exit a Business. I teach a course called Plan or Get Slaughtered. I teach those 1 or 2 times a year. You can access my books. The Road Less Stupid is probably the best work I've done in my entire career, and the book that I'm most it's the work that I'm most. So this is if you can see that. That's
all YouTube viewers, yes. Cover
of the book, and you can get that on Amazon, or you can order it through us. I teach what I've done. I teach what I know. I think the people that work with me are people that are looking for business and investing skills and tools. Make the transition from operator to owner. Spend less time reacting and more time thinking and planning. And business success to me is like everything else. It requires business skills and tools. And that's what I teach.
And you can learn it all. It's not, no one's born a salesperson or a business person. These are all skills that we can learn. And I think you all need to go on Keith's website, check out his website. At the very least, go out after the podcast, buy the book, because it's a great book, The Road Less Stupid. I just want to thank Keith for taking time out of his day. He's a really busy person. I enjoyed the conversation immensely. This is why we do these podcasts, because we love to learn from the best. Josh, I want to thank you for filling in for Jake. Had a good time with you today. I'm going to speak to you in a little bit. We're going to reflect upon this podcast and took a bunch of notes. Once again, Keith, thanks again for being on the show. We really appreciate it.
Thank you very much.